hours they're working in this team. Okay, so even though you have a salary contract for each and every employee, they work for different types of jobs, work with different clients, and we want to specifically charge clients at a different rate. So we need to know how many hours these employees have been working for particular jobs, particular orders. Okay, so we would calculate each and every employee's hourly pay rate, then multiply by how many hours they work on job A, job B, job C to determine direct labor cost. Okay, hourly pay rate multiplied by how many hours they actually work for this job. This is the direct labor cost part. Now, what about indirect cost? How do you think we're able to get to indirect cost and assign to different jobs? All different types of expenses, rental, utility, that's a portion of indirect costs. Yes? Insurance is also part of it, definitely. Those falls under indirect costs, right, altogether. So you know, you could expect a total indirect cost, right? But how do we assign it to jobs? So that's the question over here. You want to try? Very close, very close. You have an expected working hours, but the numerator part will be using the expected total indirect cost, which is very similar to what you said. Yes, very close. So basically this looks exactly the same as how we assign manufacturing overhead costs for manufacturing companies, right? So we first of all select an allocation base, which again, service company, the most important allocation base is how many hours the employees are working in different jobs. So you expect the total labor hours, and you expect the total pile of indirect costs. So use those hours to divide the indirect costs. First of all, figure out a rate, indirect cost allocation rate, and then you simply multiply that rate by the exact number of hours the workers has devoted to each particular job. Okay, so this indirect cost portion really is the same logic of how we assigned manufacturing overhead costs in manufacturing job orders. It's just here we're shifting our focus to service company, so the allocation base is not based on machine hours. We're not using machines to produce products here. It's only based on direct labor hours or direct labor costs. Most likely is hours. Okay, so we expect upfront, beginning of the year, we still don't know the exact indirect costs because remember, again, utilities, rentals, depreciation on furnitures in the office, you cannot really calculate an actual number in the beginning of the year. So we do an estimation and divide it by the expected labor hours that will be devoted to your company in different jobs. Figure out that rate multiplied by the actual hours incurred. Okay, so the bottom here is an example. Let's say particular client's case, all the employees together worked on this case for 14 hours. And first of all, direct labor costs, you multiply by the employee's pay rate in their agreements. And then you multiply the 14 hours by the indirect cost rate that you predetermined. Add them up, this will be the cost of this particular service to this client. $50, let's just assume their salary divided by the total expected working hours is 50. Okay, so this number, if you go back to read the chapter, you'll see how the annual salary is. Okay. Okay, and that's all for service company. Direct labor costs, indirect costs, determinative, pretty much the same as